In this episode, my friend Tyrone and I have a great conversation. It goes long, so we're making 2 parts out of it. But I'm convinced that if a listener will listen to both parts, they'll know with clarity and certainty whether they even want to pursue the idea of becoming your own banker. And if they do, they'll know what to do. So thank you for listening. I hope you enjoy. All right, welcome to the Bank with Life podcast. I'm your host, James Neathery, and I'm excited today to have my friend and client on, Tyrone. He's very gracious. He's, gracious enough to come on as a guest and share his experience and his journey with the infinite banking concept and becoming your own banker. And I'm pleased to have him. And he's salt of the earth. I think you'll enjoy listening to him. I know I've been looking forward to it, for several weeks now. And actually, I've been looking forward to it longer than that because I hope he shares eventually in this conversation what he shared with me about his mother. And I'm like, oh my gosh, I love her and I've never met her. Okay, enough about your mom, Tyrone. Welcome, sir. How are you?
I'm doing great, James. It's good to be here. And I, too, was looking forward to this time. And I was a little bit nervous at first about coming on, but, I began to think, I've been involved. I've been practicing now for close to right at 2 years. And with what this experience has been for me, I think it's so positive that I think others need to hear. If I can help somebody see the vision, I think I will have done, a benefit to someone. So I'm glad to be here.
Well, thanks. And somebody, you and your story and what you share is going to help somebody, whether we get to find that out or not, or how we get to find that out, is really neither here nor there. But I believe you'll help somebody. I think that that's why I like clients and friends to come on to share their experience, because whoever we are, wherever we're at in our life, whenever we're exposed to the idea of becoming your own banker, it's a really foreign concept. It's a really foreign concept. Yeah. It's counterintuitive to the way we think, and it's a direct opposite of what we've been told to do with our money. So, and me too, this has been that was my experience. But then that really kind of creates a conflict to the way we've been thinking what we understand about money. So I think people listening to other real life people share their experience just ultimately helps, So yeah. I'm excited. So 2 years ago, how did you, share with us how you even were exposed to this idea?
Man, it's a long story, but I'll say this.
I got time.
Okay, great. It really was almost a match made in heaven, because I actually was looking for this concept before I knew I was looking for this concept. And so when I can remember the moment I heard it clicked. I remember what I was doing. I was something, you may encounter something that was maybe something major in life, and you can remember the moment when, and so I can remember what I was doing when I heard it. And it resonated with me, and I says, "Oh, that's what I've been looking for." But not to get so far ahead of that, James. Let me just tell you how I got started here. My beautiful wife Denise and we have been blessed to have 8 children. So you talking about salt of the earth? This woman is incredible, man. So we've had 8 children, and so they're all grown now. And what kind of helped me get to this moment, James, is I was sitting at work one day, and my oldest daughter called me. She says, Dad, my oldest daughter, Deidre, she says, Dad, I'm thinking about buying a car. Why don't you meet me at the car dealers after work today, and you help me kick a few tires, and I said, okay, I'll be there. And so I go and we go to the Honda dealer, and So she purchases her car, and I'm kind of in on that, the dealing. So I know, the financials and this and that and the other. So a month later, my oldest son calls. Hey, Dad, I'm going to go pick out a car. Why don't you come help me, just kick a few tires? You okay, son, I'll be there. So, James, to make a long story short, within, relatively a year's time, I'm sitting there with 7 of the 8 kids having purchased vehicles, including my truck. And so I'm in on all the financials, so I know what the deals were and this type of thing. And so I found myself one day just pacing through the house. And Denise, my wife, she says, hon, what's wrong? And I says, well, I'm just thinking about all of the interest that we are paying on these car notes. You're talking about 8 vehicles. And she says, well, and to throw the figure out, I think it was something like $43K or something like that by the time all of, the volume of interest was paid. And I just thought that was maybe that's not a lot to someone, but to me, that's quite a bit of money. And I just kept thinking, like, there has to be a way that instead of this money going to the bank or going to, the financer, there's got to be something better than this. So she says, well, honey, look, don't let it bother you. It's not coming all out of your pocket. The kids are, they're able to pay their own. I said, nah, I understand that. I says, it's not out of my pocket directly, but yet it is, because we're talking about my progeny. We're talking about my posterity. And that feels like that's coming out of my pocket, especially with Dad sitting there while the deals were done. So I felt like, James, some man was in the back room somewhere, with the stogie, he's gotten over on me, And I remember saying these words. I remember pointing this finger in the air, and I told my wife, and I said these words. I said, this will never happen again. This will never happen again. And what I meant was I never wanted to see us as a family giving this kind of money and paying this kind of interest away from us. It just inherently, I just felt like that something should have stayed with us. And so I didn't know what that meant. In my mind, I'm thinking, well, if you had a large sum of money, then, maybe, you could buy cars, kids pay it back and that type thing. And so I went so far as to think, well, okay, well, it'd take quite a sum of money, pool of money to do that. Didn't want to get into things like 401k. Number one, you probably couldn't get enough of it out. Number two, wouldn't want to interrupt that anyway. But I just realized I needed something that would allow me to have access to a large pool of money, something that would allow me to make my purchases, but yet, as crazy as this may sound, why am I giving all this interest to somebody? Now, keep in mind, I don't know, like I said, the concept started coming to me before I knew the concept. But to me, that just makes sense. Why am it just seemed like inherently I want to keep that. So I kind of want my cake and eat it too, I guess. But that's how I was feeling.
Go ahead, keep going.
And so with that thought process, James, that's kind of how I got to this point so far. That was the motivating force, the motivating factor to looking for something or thinking of a way where I can make that happen.
Yeah, you covered a lot of ground there. I love that. So I want to go. No. I love it. This is what people need to hear, and because we all think this at some level for some period of time. I love the decisions and events that happen in our life and the emotions that are tied to it. It burns in our memory, and we can recall, like, I know when I was thinking about this. And so it's very emotional, when you're financing automobile or doing anything with your children. But, and back in the day, and I know in the big wide world too, that there's a lot of different examples on automobiles. And, Nelson talked about demonstrated financing automobiles with the CD sisters in his first book, Becoming Your Own Banker. And he shows the difference with the illustrations of a life insurance policy. One girl financing through a life policy, the other sister financing with CDs. And, it's just like, as a term for that. Some financial entertainers I heard one time say it's like moving rocks, from one side of the yard to the other for the first several years. Yeah. The comparison to life insurance financing and then financing automobile purchases with a CD. All right. So Nelson runs those comparisons, and granted, they're 22 years old, but look, we're all still driving automobiles 22 years later, right? Because the book was printed in 2000. But the dramatic difference over time is unbelievable. You almost don't believe the numbers that are illustrated, right? Right. Comparing the life insurance to the purchase of a CD to the purchase of an automobile. And then too, I hear a lot, and I've seen a lot of let me finance a home. I want to give me an illustration or show me something on how, that's more complex or more complicated or more exotic than financing automobiles. And then I would like to say that I think they're maybe released on YouTube somewhere. If not, I should release them, where I have demonstrated what an average automobile driver over a lifetime actually spends for the privilege of driving a car and having it insured. And it really it calculates up to, ballpark of about $1 million just driving cars. And not to go through all the details of that, but if you think about this, like, I personally drive my cars into the ground. Okay. I buy them and I drive them. My dad used to say that I could, squeeze blood out of a penny. And now I don't like to think I'm cheap, but I like to think I'm thrifty or conservative or, now my wife, I don't care what she drives. All right. I'm going to drive an old beat up truck that I can put my dogs in, right, and drive them around if they want to go. And I don't care what my wife drives, really, I don't. But she doesn't drive them into the ground. I'll drive a car 10, 15 years. Yeah. She does, and the average person doesn't either. Mm-mm. So if you look at a married couple, even if I drove a car for 10 years and she drove a car for 10 years, we're buying a car on average every 5 years. Yeah. Now, and then if you think, how long have you personally been driving? I'm 50-something years old. I've been driving for over 30 years. Right. Well, you divide that by 5, and then how many cars have you driven? And I know they didn't, back in the day, you could buy a car for $2,500, $3,500. Well, hell, if you walk by a car nowadays, it's liable to cost you $60,000 just for looking, right? Yeah. So I understand the difference, but if you drive a car every 5 years, right, and you're just paying an average price, you get an average fair trade in, you're going to spend $1 million for that privilege. Well, now, and then you have 8 children, right? And if they're married, there's 16 people that are driving. And I'll bet you your children are going to have children, like you said, your prodigy, your people, your legacy. We're talking about an awful lot of cars within a family. Right. And I know most people, don't have 8 children. I get that too, but we're still talking about a tremendous amount of money. Just in your case, if those numbers prove accurate, that's $8-9 million. We didn't even talk about your wife's car. Yeah. It's $10 million in a family. And so, yeah, it's worth listening. It's worth looking. It's worth considering this idea. And can you really do it? So, thanks for letting me share that. But you covered an awful lot of ground there. I mean, that'd be very emotional. That's a dang lot of money. I don't care who you are. Yeah. Right. Yeah. And then too, you mentioned that the volume, it's $43,000 by volume, right? I don't care what the rate is. The rate could be 3%, 2%, 6%. I don't care. Right. All right. And then you're not going to, I get the 0% financing or the 1 or 2 or 3% financing. Those are not available on pre-owned cars.
Correct.
Right. Okay.
Correct.
So, that's very powerful.
Yeah. That, James, you're absolutely correct. And a couple of those were new, but the majority of them were pre-owned vehicles. And so as I said, my thought process was to, I just, thought there has to be a better way, something that will allow me, don't get me wrong, I don't want anything for free. I don't want anything cheaper. I don't want anything for free. But I just thought there should have been a better way that would allow me to make those purchases without, just losing all that interest. And so that's the piece I was looking at. So I think that's one of the things, and you said I threw a lot out here, but I'm full. I am full when it comes to this particular strategy because, like I said, I was looking for it. So, when I was introduced to it, I hit the floor running because it's what I was looking for. So, yeah, I say that to say so. In deploying or employing IBC, it has, allowed me to, make purchases. Like I said, I'm 2 years in, but I've already saved up enough to in my bank to make purchases. Just recently, James, I live in a 4,200 square foot house. It has 8 kids. So it came with 2 hot water heaters. And we purchased this house. My wife and I built this house in 2000. And so here this house is 22 years old now. And those 2 water heaters served us well. They served us for 22 years, believe it or not. But, I figured, I was telling my wife, I said, those things. Oh, finally, another thermocouple went out. And I would change them myself. And I said, this time, let's just forget it. Those things are probably so heavy they may come through the attic, through the ceiling. So let's get rid of them. So I, had those taken out and had a brand new tankler system brought in. And so I used my IBC to make that purchase. So it's been purchases like that. My wife had always wanted what's called I don't know if I can use the brand, but it's called the Sunsetter. On the back patio, it has it's the rollaway, roof, and it rolls up, cars up. So she's always wanted that on the back porch. So, we made that purchase too, through our IBC. And so those things work perfectly, so you make the purchase, pay it back as I want to. I believe in paying it back. One thing Nelson really preached was, to be an honest banker. And that is that's crucial to this, in my opinion, because, pay it back. And so I'm going to say too, James, if I can, even it's such a difference. I found it to be such a difference when I go online and I make a payment to a credit card company versus going online, logging into my account and making a payment to my IBC. It's like night and day, the difference. You feel when I write it to that credit card company, I'm like, oh man, I'm upset. I know I have to do it, but I'm like, I'm not happy doing it. But when I write it the other way to my own bank, James, it's a whole different feeling. It's almost like, because I know that as I write this money or spend this money paying back to my own IBC bank, I know I'm paying down a balance. And as that balance goes down, my cash value goes up. So it's like, how do you beat this? So it's just incredible. It's an incredible find that Nelson did, and man, it works.
Yeah, it does. I love the way it does change the way you think, doesn't it? It changes the way you feel. It changes the way you think. It changes the way you look at your money and your cash flows. And then you're comparing all the assets you own to this and looking around. It's like, why ain't everybody doing this? You know, it's like, what's wrong with this? What's wrong with you people? Absolutely. Finally, you get to the point. I've gotten to the point where I don't care what the markets are doing. I don't care what they're doing, what they're not doing. I don't care what the interest rates are or what the interest rates are not, where they're going, where they've been. I mean, I'm aware that we've been in the lowest interest rate environment ever since in history, recorded history. So interest rates have to go up. And you know as well as I do, they're manipulated, and I can't control them, right? So then when you get into the life insurance side of it, when you're practicing the infinite banking concept, I don't care what the dividend is, as long as the company is a well-run mutual company and they at least intend on paying the illustrated dividends and they have a history of paying dividends, I don't care what the dividend rate is, right? I'm just going to do what I was going to do anyway, because your children are going to buy those cars anyway. Right. And we're making these purchases anyway. So it really gets to the point where you don't care. I don't care. I've gotten to that point where I don't care what the interest rates are. No, it doesn't matter. I just want to go do what I'm doing and I was going to do anyway. And I want to control that. And I don't want to be beholden to the third-party lender. I don't want to have to roll up my sleeve and show them some fictitious number they've tattooed on my, his history, of a credit score and that they've assigned to me. Really? Oh, it does change the way you think. And then it changes the way you feel. Therefore, it changes the way you act. So
absolutely.
For good. So.
And James, not to step on you, but I have to throw this in. And then we'll have the audacity to maybe send you an email or text or something saying, good news, your score just went up 3 points. Oh my goodness, really? So that's one of the things I love about this infinite banking concept, because that kind of doesn't matter. It does not matter. When I needed funding for those items that I purchased, I just went online and made a request. And within that, the first time was via check, I think. So it took a little while. That second time, though, it was a matter of a few days and the money was in my account. So, I mean, no one asked me, what did your third child have for their 13th birthday dinner? Nobody asked me any of those type questions. And no one asked me, okay, Tyrone, when are you going to pay this back? Or here's your payment book. Here's your coupon book. Make these payments. And none of that happens. It's I pay it back as I want to pay it back. Now I'm kind of, I like keeping count and track of my monies, because like I said, raising 8 kids, you have to stay on top of your money. and I like paying, back. So, but if something happens, or maybe I want to take the cash flow that I'm paying back this month, maybe I want to save those for a few months and go do something with that. I have, and you said the word earlier, control. That is imperative. I have the control, and I can do it as I want to do it when I want to do it. So, man, control it's a liberating feeling, man. It really is. And it's one thing to pay, as I said, and we have creditors in our life, and we always will. But it's one thing to pay them versus, because it's on their terms, it's on their time frame. Don't be late. If you do, you're going to get a ding on that famous credit score of yours. Or if you don't pay this month, I'm going to call you. If you don't pay next month, I'm going to blow you up. And if you go third month, we're coming back we're coming to take one of your 8 kids. And so none of that happens, man. So it's a great thing.
So we got the emotion and the money. You did the money. You did the calculation on the automobiles, and then keep going on how your journey has been. How you got here.
Okay, so as I said, James, I remember that was a defining moment. I think when I threw this finger in the air and I told my wife, I said, this will never happen again. I'll never let this happen again. And at that moment, I'm thinking, okay, now how do I keep this from happening again? It's one thing to say this, it's one thing to feel it, and I meant it.
Yeah.
But now I need a plan. How do I do that? How is this going to? How are you going to keep this mandate, Tyrone? How are you going to fulfill your word? And that I didn't know. So I remember one of my sons. He has autism, and so we'll go walking every day in the evening. And we'll go down to the local junior high school, and we just kind of walk around the track. And James, I'm walking with him, and I have my headsets in, my earbuds in, and I'm listening to some YouTube, something on YouTube. It may have been work related, and so anyway, I think an advertisement came on, and or no, I know what it was. I went to reach in my pocket for something. I ended up changing channels. That's what it was. And so when I did, I heard this young couple, and they were talking about something called the infinite banking concept. And I think, they called it something else. Private banking, I think is what they called it. And so I left it on that channel because I said, this is interesting. And as I began to hear them speak, and they began to talk about some of the key elements, the key points in what I know to be infinite banking concept now, as they begin to say, tell me about, the concept, that's when the light bulb went off. It was almost an epiphanous moment. And I remember saying, whoa, that's what I'm talking about. You mean to tell me that I can pay into a whole life insurance policy, pay premium into a whole life insurance policy that's specially structured for high cash value with a participating mutual insurance company, and that cash value will build to a point where it's usable. And you're talking about all the positives and pros that go along with that. And I can use it in the sense of I can borrow against that amount anytime without, any questions, make my purchases and pay that back. Now and here's where these kids got it wrong, but I kind of knew it inherently because they were saying you pay the interest back to yourself. And I'm thinking that can't be right. Nothing can be that good. But it's my banking system, James, and I'm paying that interest back to myself. I'd rather pay it back to my system that I control, and I have a partner in my system called the insurance company. And so I may pay that back to them, but it's still within my system. And that feels a whole lot better than sending that interest to somewhere else. And so when I heard that, that is what clicked for me. I said, so Tyrone, when you point your finger in the air and say that will never happen again, talking about paying all that interest to the car dealer, then here's your answer. So at that point, it just became a matter of finding out who's the agent I'm going to work with. And I'm going to stop right there and let you say something, Mr. Neathery.
Oh, well, thank you, Mr. Tyrone. Look, I love that. I've said it in the past, and, words have meaning, words have power. And I think that when we discover this, even as the agent, the advisor, the individual, we get excited, and we just want people that we love and care about to know about it and participate in it, right? But to be clear, excuse me, and you mentioned a mutual company that participates, and the mutual company is owned by the policyholders, hence your partner, right? So if I'm borrowing money from a credit card company, number one, the money didn't exist. Those digits and dollars didn't exist. And even if I go down to the bank and get a loan, those digits and dollars, and they didn't exist until I signed my John Henry, right? And therefore, I am collateralizing that loan with everything that I own because it comes with a personal guarantee. And for you financial experts out there, I know that there are non-recourse loans, but the majority of you don't own them and don't have the opportunity to own them. And if you do, God bless you. Okay. The infinite banking concept still can very well help you. So when I sign on the dotted line, I'm pledging everything that I own, right, as collateral, and even my future production, right? Okay. And the money didn't exist, the digits didn't exist, so I'm part of the problem. And then I'm going to pay, I don't see any credit cards at 4.5% or 5% or 5.5% or 6% or even 8%. The rate that these insurance companies currently charge, the loans, the credit cards, I've even seen lines of credit that are 10 and 12% with accredited investors. Yeah. So we can all cherry pick, interest rates and timelines to make our point. And I'm not trying to do that, and I don't want to do that. So, and I'm not going to do that. So whenever I borrow against the cash value of my life insurance policy, it's by guaranteed contract. If I have the cash value, I have the guaranteed right to request a loan. And they don't ask me they just ask me how do I want the funds, the money sent? And that's about it. Right. And then I now own a loan repayment. If I've been paying the credit card 15%, right, why wouldn't I value my own capital or capital that I have access and control over at least that rate? So if the life insurance company charges 5 per se, for example in conversation, and I was paying the credit card company 15, why wouldn't I make a 15% interest, quote unquote, in air quotes? Why wouldn't I use that 15% to repay my loans? Well, I would if I value my capital at least as much as I value the money that didn't exist from the credit card company. And it's really very simple. Okay. Now, either your policy has the ability to accept that, quote unquote, additional interest, or it doesn't. If it does, it just goes into the PUA as premium. So it's premium to the life insurance company above the interest rate. So let me be clear. There's an interest rate associated with every loan. The life insurance company sets that. I am actually paying interest directly to the insurance company. Well, now if I'm part owner in the company, and I am, if it's a mutual company, I'm okay with that company, any company that I'm associated with. I'm okay with them being profitable. Right. And so I want them to be strong. I'm directly affecting their profitability. Therefore, I'm indirectly affecting my dividend because the dividend that is not guaranteed is my experience or my share of the life insurance company's financial experience that year. So dividends are paid annually. They're not guaranteed, and they're based on the financial experience of the life insurance company. So if I'm being an honest banker and I'm repaying my loans, I'm just going to support the financial or the profitability of the life insurance company of which I'm part owner. It's that simple, right? And I don't care how the IRS classifies a dividend. And I don't care what the financial gurus, how they hate life insurance. I don't care. I know I'm driving cars, and you, sir, your family's driving 10 cars, right? And if they're, if you have any, if your children are married or they're going to be married, that number's only going to go up. Okay.
Right.
All right. So it is quote unquote interest in our deal that we're controlling the purchase of anything. We, the banker, that's interest. It's premium to the life insurance company, and it is additional capital to the system. It is additional capital that I have access and control over. So I know cars aren't going down in price. Nothing's going down in price. I'm going to need more capital in the future. So, and we're driving these things anyway. So I think you said it's a match made in heaven earlier, something like that. I agree, sir. Right.
Yeah. James, you said something that made me think of my father. He graduated years ago, probably over 30 years ago, but he coming up, he was old school in the sense of I don't think the man knows what a credit card looks like back in the day. He died in the 70s. So I don't think the man ever saw a credit card. He certainly wasn't going to use one. And he spoke, he often, giving admonitions of credit cards, don't use those, don't get hooked on those, because he just believed in paying cash and not being beholden to the lender. And so he operated in cash. And so I kind of see this process to me now. I since grew up, and I disobeyed Dad. I got me credit cards, and there were times where I said, man, why didn't you listen to the old man? Because those bills will add up. It's so easy to swipe.
I know the older you got, the smarter your daddy became, right?
Man, I tell you what, James, now that I'm 60, the guy was a genius, man. He was brilliant. Yeah, the older I got, the wiser he got. All of his sayings were so true and so on the money. It's amazing how that works. But it ties back, I think, to this concept because, I think one of the four key core values that Nelson taught, one of them, I think, was maybe getting rid of the snakes and dragons at some point in your life, as he called them, meaning borrowing from the banks.
Yeah.
And hey, I don't want to, discredit anyone's livelihood or that type thing, but my mom first, my family, I got to see about my folks first. And so my family first. And so whatever's going to work best for me, then for us, then, that's kind of, what I need. And so I see controlling my own funding through the infinite banking concept works great for me. And, it's something that I'm propagating to my children. At some point, I'm going to be joining my dad. And I'm already lining up with my children. Okay, here's what needs to happen after this, because this is something I want to keep going. This is generational wealth. The good book says that a good man, he leaves an inheritance, not just to his children, James, but to his children's children, on down the line, man. And so you've got to not just leave dollars, but you've got to leave a plan. Man, you've got to leave a plan. You've got to leave a concept. And so this fits the bill for me. This is perfect. And this is a part of, my journey of how I got here,
Yeah, no, I appreciate that. I love that, and I got it in quotations. I've got to see about my people, my folks. I got to see about my folks first. And the bankers, the local bankers, they're not evil people. Most of them they're not even aware of how the fractional banking system works. They're really not. I mean, I've got bankers as clients all across the country, and so I mean, they're good people. They're pillars of the community. They provide a service, doing the loans, and so people can enjoy the things that they want to purchase and commerce and all. But the fractional banking system, by pure construct, is nothing but, in my opinion, it's evil, right? And they are snakes and dragons. And I'm not talking about the local good-hearted people that are just trying to be good participants and pillars of the community. I'm not talking about them on a personal level. I'm talking about the fractional reserve banking system and all the criminals that put that together still operate. But I digress. So the local bankers are really good people, most all of them.
Yeah. That's true too, James. And you're right. Even my credit union tellers and all that, and the managers and they're in my local branch. They're all good people, know them and great people. But it's like you said, it's not the people. It's that concept, that's the snake and the dragon. It's not the people. It's that concept that's designed to beat me. And best me, and so I think every person who comes into my life to offer service or product, I don't mind paying you. I'll give you. I have no objections to paying quality, paying for quality, because that's what I want. I want something when I use it, I want it to be usable, and I don't mind if paying you the reasonable rate for that. You don't have to give me the great sale or give me the cheap yet. No, you put your time and effort in growing this or gaining that talent or that knowledge or that skill set, and I need it, so I don't mind paying that at all. But don't beat me. In the sense of, you're designing a scheme, you're scheming me, you're designing something that's scheming against me, and it's designed to get in my pocket while I sleep at night, get in my pocket, all day long. You're taking from my, so that's the thing that I object to.
Sure.
The people are great, but the system needs help.
Yeah. If you lend money that didn't exist and then charge interest, real money, that's evil. On the money that's evil. That checks all the boxes for me to meet the definition of evil, right? And so this is the exact opposite of that. The life insurance companies can't leverage. They can't print money out of thin air. You've had to pay a premium, and the cash value is a derivative of the premium. So the more premium you pay, the more cash value you have, and the premium is being paid from your talents and your experience and your time by creating everything that you create and trading your time and and your using your God-given abilities and talents. That's real money, right? So it's just the exact opposite of fractional reserve banking. So therefore, I believe it requires even more honesty. We need to be honest and pay, the loans back. We need to be an honest banker because it's going to affect us and it's going to affect our future generations, right? And it's like, heck, if you're in a dishonest system, fractional reserve banking, there's a lot of dishonest things that go on there, and who wants any part of that? Not me. Okay. All right. So you were exposed. A young couple was talking about it. And then, so where'd you go from there, Tyrone?
So,
and I do want to circle back in your own timeline. I want to circle back to your mom and daddy, because I'm telling you,
the
listener, that's powerful, but all right.
Okay. I'll get there too. So the young couple, I was really glad I'd stumbled across them, because what they said, it resonated with me. And as I said, it was like an epiphany moment. A light bulb went out, and I realized that the concept that they were talking about is what I was looking for. And so then I began to look. At that point, I just started watching their channel, and I began to see them, and they were just told more about the concept. But I, James, I'm 60 years old, or at that time, maybe I was 58. And they, these are young kids, maybe in their 30s. And I'm thinking, okay, I hear what you're saying, but 58 years of experience tells me that maybe it's not quite right. It can't be. I know it can't quite be like that. One of the things, like I said, they kept saying was that the money, the interest that you pay, you're paying it to yourself. And that's kind of misleading in the sense of it makes it sound like you're not paying interest, or the interest you're paying is going in your pocket. But technically, it's going back into your banking system. And as you said, that goes to the insurance company, and then the insurance company is profitable, and then you reap from that the profitability of the insurance company, through the dividend. So it doesn't indirectly go there, but it's not direct. So that and other little things, I was thinking, that sounds too good to be true. So what I did was I said, well, now that I know what this concept is called, let me look on other channels. And so I start surfing other channels, and I came across another channel, and there again, it was a young man, and he was teaching the concept, but he was calling it something else too. He wasn't calling it IBC. And I began to listen to him for a while, and to me, it just didn't resonate. I just felt like, okay, let's just keep looking. Let's keep looking. So eventually I came around to this channel, James, and I see this guy about my age, and he's got this Texas accent. And I'm thinking, okay, now we're getting closer to home. And so this guy was named James Neathery. And I think you were there talking with Ryan, and that's when I started listening to the Banking with Life and podcast. And so at that point, I began to you guys preached the concept straight out of the book, out of Nelson Nash's book, and he was the originator of the concept. Those questions that I had it felt like, I heard these other people talking about it, but it felt like too good to be true. You brought clarity to those, and you brought a foundation to that. I said, okay, now, even though I'm new to this concept, some things are foundational. I know nothing's for free, and you begin to put a lot of things in perspective. And so at that point, I began to listen more and more and more. I says, yeah, okay, I think this is the guy I need to call and see about going further into this process. And so at that point, I realized, I knew that the concept was what I was looking for. I knew I was ready, and I knew that sooner or later I would get the agent. Now, let me say this, James. I am unashamedly Christian, and I love the Word of God. I love the quote scriptures, and but there's a Chinese proverb that fits, the way I felt at that moment. And it simply, in the Bible, it talks about seasons. Things happen in seasons. And this proverb said it this way. It says, when the student is ready, the teacher will appear. And so I was ready for it. And so I just knew it had to be a matter of finding the right agent. And so when I turned to your podcast that day, your channel that day, then and begin to listen further, I know, okay, here's my man, here's where I go. And so I placed that call, and I think I called into the office. And let me just do a digression here, James. I'm sorry, I talk a lot.
No problem.
But man, you talking about the ladies in that front office, A1 service, man.
Thank you.
These chicks, A1 service. I mean, if I could take you to my living room, on my fireplace, I've got a birthday card from my wife. I've got Christmas cards. I've got a Thanksgiving day. Just any question I had, they were all over it. And I mean, prompt service. When they say, hey, I'll get back with you. Let me check this out. I'll call you back. They will call you back within the time they say they will. Just A1 service. And so that just sealed the deal. That sealed the deal.
That's cool.
And then one more name let me throw out. I've got to mention Jake, because Jake was the guy, boy, that kid. He was the guy who I talked to, and you think I get excited. Jake, he's your son. This guy, he was so excited to share even more of the concept with me. And man, it's almost like we bonded right off the bat, and I'm sitting here thinking, okay, I'm old enough to be this kid's dad, but yet, we just bonded. And he was so excited about it, and he had his ducks in a row. Everything he said was it made sense. It followed Nelson's book. And so we just, he began to tell me what the next steps were, and I think eventually we got to illustration. But I was one of those people that the illustration is nice, but I understood the concept, and I know it's the concept is what I really want. I want that control, and that's what the concept brings me. So that's how I got into the James Neathery and Associates office.
Thanks for sharing. Look, I'm surrounded by. I can't wait to tell them the chicks up here at the front. They're cool. They're smart, and they're salt of the earth. They care, and I hadn't released it yet. I shot a little video. It's going to go out to client only here in the next few weeks, so you're going to get it. But we've got some new members. We hired 3 new ladies, 3 new chicks. Right?
Oh man, bad words.
No. They're beautiful. They care, and they provide service. That's what the office here exists for, is to not only gain clients. Of course, we're capitalists. We want to be profitable. We want new clients, but we want to take care of our existing clients. And what does that mean? I'm not. Let me be clear. We take care of them. We want to be of service to them. We don't want to create dependency. We want to education. Expand their thinking and elevate their comfort level and their confidence level, because this is different. This practicing this concept is different, but it's not hard. And so that's what I mean when I say service. If you're traveling around the world and you need a loan and you can't access something, it's pretty cool when somebody picks up the phone and you're calling. Especially if you're overseas. And I mean, I can give you example after example where service can make a difference in a deal.
Yes.
Right. But anyway, thank you for saying that, Tyrone. I hear it all the time. They probably don't hear it as much as they need to. So thanks for saying that, and thanks for letting me hijack you there for a minute. But keep going, sir. Okay. And I appreciate that. Okay.
Yeah. So, and that's true. That's heartfelt. They deserved it. So, so taking this further and working with Jake, Jake drew up illustration for me, he called me again, and we kind of went over and told me, hey, this is how this is read, and this is how you go through this. And he went over it with me. And so it wasn't just the numbers, but like I said, it was the concept. But and then that eventually, obviously, led me with you too, James. And so we went ahead and we drew up that first policy. And I said first because we have 2. I had to come back, and because it makes sense, and it's kind of like you said, when you create the policy, I eventually found myself in a position where I said, wow, I wished I had made this where I could get more money into this policy. and so I think maybe starting out, maybe, I wish my vision had been bigger, because at some point I realized, well, you know what? I need more room in this policy. And I think so we started a second one the first one was on me. The second one is on my wife, Denise. And so I think hers is, we're a little over a year on hers. And I think I'm at 2 years on mine. And so collectively, that is my banking system. And so we, as I said, right now, I'm in what Nelson called the capitalization stage, where I believe he said like 4 to 5 years, just work on capitalizing your bank. And James, let me say this too. For some, I took a note here, if I can just share that right quick.
Sure.
Because I made some comments along the way, as I began to practice this concept. And one of the notes that I made here was, first of all, I'm as I said, I'm a Christian. I believe in the Word of God, and there is a scripture that comes to mind when I think IBC. First scripture that comes to mind, and I want to share it because to me it's very important. The scripture is found in 1 Thessalonians 5:21. And it simply says, prove all things. And then hold fast to that which is good. And so what I did, and what someone who's hearing my voice and seeing this podcast, and you're thinking about what we're talking about here, to me, that means vet this process. Sit down up front and vet it, man. You look at it every which way, and you vet the process. Take your time, get Nelson's book, read the book, reread the book. Read it a third time. I don't know how many times I've read it through, because you get something every time you read it. Then I've got the second book. Miss Julie sent me the second book of Nelson's, and I've got some other books. Vet the process. Now, it's very important that you do that, James. I'm going to tell you why. Because you have got to get it in your mind and get it set firmly within you. Hey, this works. I see this vision. And you have to do that because the next step, and this is Tyrone's own words, Tyroneology here. The next step you're going to have to do after you fully vet it is you're going to have to not be afraid to finance your bank, man. I think, James, you, or it may be Nelson, something says, do not be afraid to pay a premium. If paying a premium, if that phrase sits uneasy with you or scares you, then don't be afraid to finance your bank, because that's what you're doing. So you vet this process, because once you do, you're gonna start paying that what helps you pay. Once you see the vision, then you do not have objections to financing your bank. You don't have an objection to paying the premium because you see the vision. You know that you see what's going to happen. You see where this thing is going. It's right on paper. It's right in your gut. This thing is right. So vet it, and then vet it because you're going to have to finance your bank. That's imperative. And what I mean by that too, James, is be intentional in financing your bank. Look for cash flow. As I free up cash flows in my budget, and I pay something off, then I take that cash flow and I'll let it collect for a little while if it's so small, and then I'm going to send it to my bank. I'm going to capitalize my bank. Well, one time, James, I test myself. I'm like, and I don't mean to hog the show, man, but this concept is great for me. I'm kind of like one thing I have in common with Warren Buffett, as they say. It's said that Warren, every day going to work, he'll stop by McDonald's and he will buy the English muffin, the Egg McMuffin. Have the Egg McMuffin sandwich. And so I do that a lot too on the way to work. I'll pull a Mickey D's and I'll buy my Egg McMuffin. And that, not because he does, but because it's fast food, but it's not as bad. So I'll buy the Egg McMuffin. So sometimes what I'll do, James, when I say be intentional in your financing, I will forego that $3.48 now for a week. Let that add up to $17.40. And I may do it a second week. And then I will, and I'm intentionally doing that as a cash flow to financing my bank. Yeah, that's what I mean by being intentional. And you do that. So what you're doing is training yourself. You're helping yourself. Help yourself, man. And so be intentional, in financing your bank. Don't be afraid to do it. Be intentional. And so it's only going to help you in the long run. So I got other points, but I'll just hold it right there for a minute.
Okay, so we went long, so we're going to cut it here and pick it up in part 2. Thank you for listening, and we'll see you then.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.